Hey fellow Stock Guardians, it's Hoda Mehr, founder and CEO of StockGuard, and this is a Stock Market Daily Roadshow. It's August 16th, 2021. I covered a few Fed officials hinting at the need for monetary policy changes in the upcoming Fed meeting and how those statements impacted the market today. I also covered interesting electric vehicle ETFs and looked into what the autopilot-related stock price drop for Tesla and NIO may mean for their investors. If you are an investor in those stocks or consider investing in them, please pay attention. The market indices ended the day mixed. The S&P 500 and Dow Jones hit new records by the close today, while the Nasdaq slipped slightly into the red. There hasn't been much happening today that moved the market, and it shows in the indices. One piece of noteworthy news was on Wall Street Journal about some Federal Reserve officials beginning to call for a tapering of bond buyings next month at the Fed's upcoming meeting. Bond purchases are meant to support the economy by encouraging lending and spending, and tapering those buybacks is part of returning to a more normal economy. However, opinions remain split on whether this step should be taken so soon or not. We still have to wait for the Fed's meeting to hear about their official stand on the matter. Let's keep an eye on them. Before we get to today's EV ETFs and stocks analysis, let me thank you for being a Stock Guardian. My team and I appreciate you watching, listening to, and reading the Daily Roll episodes. And more importantly, we thank you for using a StockGuard platform in your stock market research. Thank you for being a Stock Guardian. If you aren't a user yet, I'd like to invite you to try now. First, hit the like button, subscribe to the show, and then create a free account on StockGuard.io. Thanks for becoming a new Stock Guardian. Electric vehicles, or EVs, are one of the mega trends shaping society. It's no accident that EV stocks created so much buzz in the market last year. For one, the EV battery and vehicle costs are declining rapidly, encouraging automakers to pledge to fully or partially transitioning to EVs. Also in favor of electric transportation is climate change-friendly policies by governments around the world. These are creating the infrastructure required to make the transition from combustion engines to EVs. For example, the Biden administration infrastructure bill focuses on developing EV charger networks across the US. That's why the EV megatrend is one of the trends every investor should consider in his or her portfolio, especially if you are investing for the next decade or so. But it's very difficult to decide which EV stock is going to win the market. Is it pure play car makers like Tesla or old-timer companies such as Volkswagen? When it comes to megatrends that are in early innings and it's hard to figure out which company would be the winner, one strategy is to invest in a well-managed ETF, ideally one that is putting a diversified basket of such stocks together and charges a reasonable fee. I took a look at a few EV-oriented ETFs today. Here are two of them I found worth your attention. Number one, the iShares Self-Driving EV and Tech ETF, ticker IDRV. Is a fund that tracks notable transportation companies that develop autopilot systems and, of course, electric vehicles. I came across this ETF on NIO's StockGuard. NIO is one of the top 25 holdings of this fund. Under the valuation section, we can see that this fund is considered cheap to buy right now and has a great forecast for growth in the future. Scrolling down even further, it looks like the ETF gives you a wide range of exposures ranging across different countries, sectors, and market cap compared to the S&P 500. This can be better than investing in something like the S&P 500. Another prominent ETF is the Amplify Lithium and Battery Tech ETF, ticker BATT, BAT for battery. This particular fund is focused on lithium battery technology that powers the EV industry. In the same sense that gas mileage is a major selling point for vehicles, The same goes for electric car batteries. Investing in the future of lithium batteries gives you plenty of exposure to the EV boom, and this ETF is a great opportunity for that. Once again, you can see that BAT is reasonably priced, but has reasonable risk as well. Make sure to pay attention to the details here. If you expand the risk section, you'll see that the turnover rate for stocks here in this ETF is 131%, meaning that the fund managers are doing more trading than holding, just something to be aware of before you park any money there. If you have a favorite EV ETF, let me know in the comments. I'm still looking to find the best one to invest in and benefit from the EV megatrend. Speaking of the lithium battery ETFs, one of the top 25 holdings happens to be NIO again. NIO, ticker NIO, is one of the most prominent EV companies in China. Today, NIO shares were down nearly 6% after one of its SUVs was reported to have crashed while driving on autopilot, killing the driver, unfortunately. On NIO's stock card, you'll see that it has great sales growth and plenty of free cash flow. Despite this, setbacks like today are inevitable as the driving systems are refined. It's hard for investors and regulators to brush off serious issues like these. Today was not the hottest day for the stock nor other EV companies, which may mean a chance to pick up shares if you can tolerate volatility like today. Tesla, ticker TSLA, also fell in tandem with NIO today, dropping more than 4%. This is due to a similar situation in the US. The National Highway Transportation Safety Administration, or NHTSA, filing an investigation into Tesla's autopilot feature. The filing cites at least 17 injuries and 1 death connecting the autopilot system developed by the company. The NHTSA also referred to 11 instances where a Tesla driving on autopilot hit emergency responders or their vehicles. An exciting takeaway on both NIO and Tesla is that the EV megatrend and the autonomous or autopilot developments are merging as leading EV makers try to differentiate themselves from old-timer car makers who are entering the EV market in droves. You can find Tesla as a top 25 holdings of the iShares self-driving EV and tech ETF IDRV that we spoke about a little bit earlier. The case to invest in NIO and Tesla is shifting from EV makers to autonomous car makers, which is a noteworthy change if you're holding these stocks. It's good that they are making a move, but it also means many more years of volatility as these companies sort through the challenges related to autopilot technology. If you're an investor, you're going to be aware of this new development. That's it for today. If you haven't already done so, please give a stock card a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Picks page on the Stock Card platform. Don't forget to sign up for a 14-day free trial with promo code ROLL with our CEO, all lowercase and in one word. Like, subscribe, and share these daily market recap reports with your friends and fellow investors. Come back tomorrow for another episode. I'll see you then.